Continuing ahead of our previous class, let us move to practical questions now. Now here this question says that XYZ Limited issued a prospectus inviting applications for 50,000 shares. That means students, the company has offered 50,000 shares for public subscription. The value of these shares is rupees 10 each, payable as 3 per share on application, 5 per share on allotment and 2 per share on call. Since nothing is mentioned, so it is first call only. We can see that 3 on application plus 5 on allotment plus 2 on call makes a total value of 10 rupee per share. Then applications were received for 60,000 shares. Excess applications were rejected. That means their money was refunded. All the money was duly received, journalize. Now students, in this case it is very clear that since the company had offered for 50,000 shares and the applications were received for 60,000 shares, it is a case of oversubscription. In this case, the company has received excess applications to the extent of 10,000 shares. Now, it is clearly mentioned that these applications have to be rejected. That means their application money, whatever has been sent by the applicants, has to be returned to them. So now let us prepare a journal and journalize for the issue of shares by XYZ Limited. The first journal entry would be for receipt of application money by XYZ Limited. So the entry would be bank account debited to share application. Now students, in this case, we had received application for 60,000 shares and the application money that was payable by applicants was rupees 3 per share. So that means 60,000 multiplied by 3, we have received a total sum of 1,80,000. Narration would be being application money of rupees 3 per share received for 60,000 applicants, or we can also write it as for 60,000 shares. Now students, this entry signifies that we have received application money for 60,000 shares. Remember, the company had offered 50,000 shares. That means it would have to allot 50,000 shares and the excess money of 10,000 applications that it has received should be refunded. So the entry for that would be share application account debited to share capital to bank. $1,80,000 was the total amount in share applications. For share capital, the money equivalent to the capital of the shares that the company has offered should be transferred to this account. That means the 50,000 shares that were offered multiplied by 3 rupees, that is the share application money. This is the amount that belongs to share capital. So the amount is 50,000 into 3, that is 1,50,000. And excess money of 10,000 applicants, that is 10,000 into 3, that is application money, which comes to 30,000, should be refunded. Narration would be being application money transferred to capital and excess rejected and refunded. Thereafter comes the allotment stage. At this stage, the company will seek the allotment money from the shares that it has allotted. Remember, in this case, the company had allotted 50,000 shares. So the allotment money of rupees 5 would be due on 50,000 shares. The entry for that would be share allotment account debited to share capital, that is being allotment money of rupees 5 per share due on 50,000 shares. So the total amount comes to 50,000 into 5, 2,50,000. Now students, this is the amount that is due or receivable from the persons to whom we have allotted these shares. The next obvious step would be to receive this money from them. Now the question very clearly mentioned that all the money was duly received. So the entry for receipt of this amount would be bank account debited to share allotment account. All the money was received, so 2,50,000. Narration would be being allotment money received. After this, the first call money will become due. Now in this case, the first call money was rupees 2 per share. So the entry for that would be share first, and since it was the only call, so we can write share first and final call. Share first and final call account debited to share capital account. Narration is being first call money due or receivable, and the amount is 2 rupees multiplied by 50,000 shares that the company has offered. So it comes to 1 lakh. And lastly, we would receive this amount. So entry would be bank account to share first call account. That is bank account debited to share first call account 1 lakh, and narration is being call money received.